Looking for ways to boost your income and achieve financial success? Today, I will reveal the top 10 assets that can help you earn money and build long-term wealth. Whether you're a seasoned investor or just getting started, these assets are sure to provide a lucrative return on investment. So buckle up and get ready to learn about the smartest ways to make your money work for you. If you don't find a way to make money while you sleep, you will have to work hard all your life. For most people, making money outside of a job where you exchange your time for money is just a fantasy or seems too difficult to achieve. Instead, wealthy people are aware of a range of potential ways to earn money. One of the best-kept secrets of the rich is that they create and acquire high-quality assets that generate money, which they use to acquire more assets. An asset is any property, tangible or not, which generates money over time, appreciates in value, and allows us to make more income. In this video, I will explain in a simple way 10 assets that can make you rich. If you're interested in financial education, consider subscribing to the channel and let's get started. Let's start with the first of 10 assets that will make you money, and that is growth shares. Shares are simply partial ownership of a company, which makes shareholders into part owners. Meaning that when you become a shareholder of a company, you are given growth shares as part of your ownership. This entitles you to a share in the company's profits and earnings growth. They can be from a company whose shares are traded publicly in the stock market, such as Apple, Tesla, Amazon, Google, and others. Shares can also be issued by a private company, such as the local supermarket. Companies issue shares on the stock market when they need to acquire capital or raise funds to invest in the growth of their company. Instead of obtaining credit or financing, they become part of the company's assets. Now, how does it work and how do you make money? Suppose that the supermarket is doing well in business and has had good earnings year after year. The owner decides to expand by opening up more stores and thus needs more capital. He opts to do an initial public offer, IPO, where he would issue shares in the stock market. This move is based on his successful business model that he wishes to sustain. The company's value is $1 million, and 100,000 shares have been issued. To calculate the price per share, we divide $1 million by 100,000, giving us a price of $10 per share. As an example, let's say Emma sees the potential in a company and decides to invest by purchasing 10,000 shares. This makes her the owner of 10% of the business. She invested $100,000 since each share cost $10. Over time, the company continued to expand and generate good earnings every year, reinvesting those earnings. After 10 years, each share was worth $100. This means that Emma multiplied her initial investment by 10 times, from $100,000 to $1 million in 10 years. But to realize this profit, she would have to sell her shares. Doing so would earn her $900,000 and a return on investment of 900%. This price will fluctuate daily, sometimes going down and other times going up. The price of the shares increases when there is more demand from buyers and decreases when there is more supply from sellers. This is due to a number of factors. One example of a famous person who has made money with growth shares is Warren Buffett. Buffett is widely regarded as one of the most successful investors of all time, and he has built his fortune by investing in growth stocks like Coca-Cola, American Express, and IBM. Over the years, Buffett has made billions of dollars by buying shares in these companies and holding on to them for the long term, allowing their value to grow over time. Buffett's success with growth shares has earned him a reputation as a savvy investor, and his investment strategies have inspired countless others to follow in his footsteps. The next asset that will make you money is shares with dividends. One of the most profitable investments you can make is shares with dividends. These stocks provide a periodic payment known as dividends, usually every quarter, to their shareholders, which usually consists of a part of the profits made by the company. As an example, let's say a company called Gadget, being an established company with steady earnings, has chosen to pay dividends to its shareholders. This can bring some growth for the company. However, not at a rate as steep as those of shares whose main focus is rapid expansion. Let's say the company's stock price is currently set at $100, and they have decided to pay a dividend of $7 per share for that year. If we divide what it will pay by the price, this gives us a return of 7%. Now, Williams will receive $70,000 in dividends per year, divided into 4 payments of $17,500 every 3 months from his 10,000 shares. In this case, he will receive the income while still maintaining his main asset, his ownership in the company, which has potential for further growth in price. Shares by dividends are one of the favorite forms of passive income, since the money invested in these companies does the work, allowing us to use our time as we wish, giving you the flexibility to continue looking for investment opportunities. By the way, if you're enjoying the video so far and want more topics like this, comment the word "more" so I know. Moving on to the next of 10 assets that will make you money is Index Mutual Fund, or ETF. The average annual return of the American stock market is between 8–10%, much higher than what most banks offer, 1%. Investing in the stock market is a great way to achieve this return. You may be wondering how to get a return if you cannot buy all the shares of the stock market. The answer is simple. Because you invest in an indexed fund. Mutual funds work by pooling together the money of multiple investors and investing it in an asset portfolio. An indexed fund is a mutual fund which seeks to replicate the returns of an underlying index, such as the S&P 500 or the Dow Jones Industrial Average, meaning that it allows you to invest in a broader range of assets without having to pay high fees. The Standard & Poor's 500 Index shows the performance of 500 largest companies in the U.S. Thus, if this index rises by 20% in value by the end of the year, an indexed fund that follows this index will likely have similar results. Apart from the S&P 500, other well-known indices include the Dow Jones Industrial Average, covering 30 of the biggest U.S. companies, NASDAQ, containing tech giants, and FTSE 100 Index, which is the main stock market index in England. The Nikkei 225 is a stock index that measures the performance of Tokyo Stock Exchange, making it an essential tool for determining the health of the market. There are also exchange-traded funds, ETFs, that behave like stocks. Shares of these investments can be bought and sold throughout the day with prices that fluctuate constantly. They can track not only an index, but also an industry, bonds, basic goods, or commodities such as gold, silver, oil, or Bitcoin, among others. It is expected that renewable energy companies and alternative energies will be highly profitable in the stock market in the next decade. There is a fund that brings together companies in this sector, and you can bet on it, reducing the risk and commissions of having to buy each share of these companies individually. The advantage of indexed funds is that they maintain low rates and commissions and are a type of passive investment. They do not require the investor to spend time on them. It can be invested automatically month after month, avoiding the highs and lows of the market on a daily basis. It also provides instant diversification in a portfolio. One example of a famous person who has made money with index mutual funds or ETFs is John C. Bogle, the founder of Vanguard Group. Bogle is credited with creating the first index mutual fund, which was designed to track the performance of the S&P 500 index. He believed that most actively managed mutual funds were unable to consistently beat the market, and that investors would be better off investing in low-cost index funds that simply track the market's performance. Bogle's philosophy proved to be incredibly successful, and Vanguard's index mutual funds and ETFs have become some of the most popular investment options in the world. Bogle himself became a billionaire by investing in these funds and holding them for the long term, proving that even the simplest investment strategies can be incredibly effective when executed properly. Today, Bogle is widely regarded as a pioneer of index investing, and his legacy continues to inspire millions of investors around the world. The next asset that will make you money is active funds in mutual fund. Active funds in mutual funds refer to investment funds that are managed by a fund manager who makes investment decisions on your behalf in the fund. These fund managers aim to outperform the market by selecting individual investments that they believe will perform better than the market average. In an active mutual fund, the fund manager will typically use their expertise and research to analyze various investment options and select those that they believe have the best potential for strong returns. Active mutual funds are typically more expensive than passive funds, such as index funds or ETFs, because of the higher management fees charged for the expertise and resources required to manage an active fund. Additionally, active funds may have higher trading costs and turnover rates, as fund managers may buy and sell assets more frequently in an attempt to maximize returns. While active mutual funds offer the potential for higher returns, they also carry a higher level of risk, as the fund manager's choices may not always lead to outperformance. As a result, investors need to carefully weigh the benefits and risks associated with active mutual funds before investing in them. We can discuss whether this method is beneficial or not in another video. The next of 10 assets that will make you money is Bitcoin. Cryptocurrencies, particularly Bitcoin, are gaining popularity due to their scarcity and potential to generate wealth over time. The concept of digital currency has been around since 2009, when Bitcoin was first developed. The number of Bitcoins that are expected to be released worldwide in upcoming years depends on various factors such as the mining difficulty, the rate of new block creation, and the rate of Bitcoin adoption. 21.4 million coins are expected to be released worldwide. Over time, coins such as the dollar, the sterling pound, the euro, and the yen lose their value because they can be created in unlimited quantities. Governments and banks are emitting more and more currency, which means that a dollar today will buy fewer and fewer products and services tomorrow. The price of Bitcoin has fluctuated due to the current financial situation, thus affecting the supply and demand of the market on various cryptocurrency exchanges. Despite this, cryptocurrency specialists are convinced that Bitcoin is going to surge beyond its previous record highs, and could even reach the astounding $100,000 mark within a short time. Surely you are wondering, when and how will this happen? Well, this speculation was fueled by a renowned investor who recently gambled that Bitcoin would achieve an unbelievable milestone of $1 million in only 90 days. As you probably already know, in 2021, the price of Bitcoin was around $47,000. Bitcoin, the largest cryptocurrency by market capitalization, is a high-risk investment with high volatility. Therefore, you should only consider investing in Bitcoin if you have a high-risk tolerance, are in a strong financial position, and can afford to lose the money you invest in it. You can buy Bitcoins in exchanges and store them in wallets or digital wallets. Another way to acquire Bitcoin is through the purchase of ETFs or stock exchange-traded funds that track the price of Bitcoin. To gain monetary benefits from Bitcoins, they need to be sold. Additionally, a profitable way to make money is by lending out your Bitcoins, which can earn you a certain amount of interest. However, it is always recommended to check the current price on a reliable cryptocurrency exchange before making any investment decisions. The next asset that will make you money is bonds. Bonds are a type of loan that an investor can take from a company or government in exchange for paying back the amount with interest at some point in the future. For example, Madrid's football stadium project requires funding, so the city has issued $1,000 bonds with a 5% annual interest rate, which will be valid for 10 years. The bonds are being used to raise money for the project. Madrid provides a $50 coupon or interest annually and returns the $1,000 investment amount at the end of 10 years. While this is an attractive financial decision, it is important to remember that it involves some degree of risk. The issuer may pose a risk of not fulfilling payment obligations or adhering to applicable regulations. When a business is financially distressed, they may not be able to pay as much as governments on their bonds. To account for this risk and encourage debt purchase by investors, credit rating agencies assign a grade to the bond. AA is their highest investment grade, and D is their lowest rating. To diversify, bonds can also be bought in index funds or ETFs. As a fixed income, bonds are seen as a less risky investment instrument than stocks. They are often used to diversify an investment portfolio and there are a variety of types of bonds. The next of 10 assets that will make you money is real estate. Real estate remains a top choice among affluent people as a great way to generate and store wealth, with passive income being an attractive bonus. Investing in and maintaining properties over the long term is one of their preferred strategies. Investing in residential and commercial property can be a great way to grow your wealth over time. Appreciation in the value of the asset, along with rental income from tenants, makes for an attractive investment opportunity. Everything sounds great, but it is not that easy. In order to make properties attractive for renting, repairs and maintenance are necessary. These come with the potential risk of not being compensated by tenants, however. When investing in real estate, it is important to select a property with great care, as selling it can be a lengthy process. It may take anywhere from several months to multiple years to receive returns from your investment. In order to increase a return, it is important to pay attention to other investments, such as properties that are priced lower than their true value. You can then restyle them and either rent them out or put them up for sale. According to Robert Kiyosaki, real estate is his favorite investment, as he believes it provides a stable source of passive income and can appreciate in value over time. Now, if you would like me to create a video about Kiyosaki's method for creating wealth in real estate, please comment below the word video. Moving on to the next asset that will make you money is creating a business. One of the assets with the most potential for growth is starting one's own business or partnering with one or more people. It is not necessary to start big. Rather, one should think big and take small steps towards that great vision. Running a business can be very time-consuming and energy-intensive, posing a challenge. Since it gives us a degree of responsibility, it depends largely on you to make it prosper. It is a combination of passion for what you do, creativity, quality products and services, a good understanding of the needs and future movements of the market, and the desire to serve others with your skills and talents that will make your business successful. Similarly, the company's capital and profits must be properly managed and reinvested in the company's growth, followed by investment in other assets. The variety of businesses that can be started is wide, ranging from buying and selling food, electronic devices and personalized articles online, to car maintenance companies, construction companies, software development, mobile applications, delivery services, real estate, and restaurants are some examples. The next of 10 assets that will make you money is digital assets. The progress of technology has made it much easier to create and market products or services digitally. The use of computers, smartphones, tablets, and the internet has enabled the growth and increased adoption of these tools. In the past, if an expert introduced a 2-hour programming seminar to an audience of 100 people, they would make $1,000 in just 2 hours. The limited space of the auditorium meant that only 100 people were able to attend and pay the fee of $10. Due to the internet and modern platforms, seminars can now be conducted online at a low price. This makes them accessible to more people and also allows for easy scalability. Not only can it reach 100 people, but it can also reach thousands, if not millions. Now, if 1,000 people attend, the income for those 2 hours can be $10,000. The potential for a live seminar is huge. The expert can record it and sell it, making it an asset that generates money for the creator even while he is sleeping. This is applicable to online courses, ebooks, videos, images, and music, where rights are sold for third-party commercial use. The next asset that will make you money is financial education. Having a comprehensive understanding of personal finance is one of the most powerful resources available to an individual, as knowledge cannot be stripped away from them. Moreover, it is important for everyone to learn how money works in order to make informed decisions and safeguard their financial future. Gaining knowledge on personal finance is a key factor in making sound financial decisions. Understanding the basics of money management enables you to make prudent, money-related decisions and secure your financial future. Financial education covers a wide range of topics that can help you manage your money better, such as saving for unexpected expenses, investing in various assets, and creating new sources of income beyond your salary. In addition, it also covers managing debts and mortgages, understanding credit cards and interest rates, as well as saving and investing for retirement. Being well-informed regarding taxes and understanding the ways to benefit from the available tax incentives can be beneficial. It's essential to have this knowledge in order to make sound financial decisions. Achieving financial success requires investing in the right portfolio of assets. These could include growth stocks, dividend stocks, index funds, mutual funds, cryptocurrencies, bonds, real estate properties, businesses, digital assets, and learning about proper financial management, which we had covered today in 10 assets that will make you earn money. Note that assets can also decrease in value due to multiple factors, such as economic cycles, interest rates, policies, and government regulations, among others. This video is for educational purposes only and does not constitute investment advice. Now, if you want to know 5 things rich people do to earn more and stay rich, I recommend you watch this video next. Do not hesitate to share this video. Subscribe to the channel and share your thoughts on today's video. Thanks for watching, and I'll see you in my next